Well, I am Jogendra Rana. The topic for the discussion today is decline in the premium growth of Indian insurers. Decline in the premium growth of Indian insurers. India's non-life insurance industry, led by the health segment, witnessed a decline in growth during the financial year ended March 2025. So, amid this slowdown in the economy and a hike in premium across the board by insurers, the gross premium income underwritten by insurance companies was at 3.07 lakh crore during financial year 2025 as against rupees 2.89 lakh crore in FY24, showing a decline in the growth at 6.21% as against 12.77% in the previous year. The General Insurance Council data shows that the growth rate in the health insurance, the largest segment in the non-life industry, plummeted during 2024 to 8.98% from 20.25% in the previous year, with the gross premium income of insurers at rupees 1.18 lakh crore in financial year 25 as against rupees 1.08 lakh crore last year. So the sharp hike in premium and increasing claim rejection prompted customers to defer decision on buying health insurance policies. The premium income on government health insurance schemes declined by 12.17% to rupees 9,234 crore. So the growth in the insurance sector has slowed down, with inflation and stagnant incomes forcing consumers to prioritize essential expenses. As a result, many individuals and businesses are cutting back on discretionary spending, including health insurance premiums. Industry experts warn that high premium and perceived low immediate need are driving a significant portion of the population to delay or avoid purchasing insurance, especially health insurance altogether. This trend shows down the growth in the sector as insurers struggle to attract new policyholders. A major reason for the growth slowing down is the sharp rise in the health insurance premiums triggered by medical inflation and high claim status. The RDI recently directed insurers that they should not revise the premiums in health cover products for senior citizens by more than 10% in a year. The regulators move follows a sharp hike in health premiums by over 50 to 60% by insurers in the case of senior citizens, with some insurers even resorting to 100% hike in premiums. So the health segment is witnessing high costs. Insurers are becoming choosy. They are targeting young people who are paying lower premiums, but it is a profitable portfolio. The alarming jump in hospitalization expenses indicates the surge in healthcare cost and medical inflation in the country. So medical inflation is on the rise and current inflation is around 14%, which further fuels the hike in the premium. The premiums to be kept, but the same cannot be done unless the hospitals are regulated. So the rise in health insurance premiums can be attributed to several factors. According to the industry data, the average cost of healthcare services has increased by 15% over the past year, driven by advancement in medical technology and rising labor cost. Additionally, the growing prevalence of lifestyle diseases such as diabetes and hypertension has resulted in a high number of claims. In fact, industry claims data shows that lifestyle-related diseases account for over 30% of all health insurance claims. So, the health insurance sector experienced robust growth during and immediately after the COVID-19 pandemic, driven by heightened awareness and increased policy purchase. However, as the pandemic's impact subsidized, this surge in demand has gradually normalized, leading to a tapering effect on growth. The implementation of a revised premium recognition methodology has impacted the segment's growth. Meanwhile, the growth in gross premium income in the motor insurance segment fell to 7.95%, rupees 99,065 crore in financial year 25, from 12.92%, rupees 91,780 crore last year. So of this, rupees 58,711 crore is accounted for by third-party motor premium. According to the GI Council data, crop insurance premium declined by 1.98% to rupees 30,095 crore during financial year 25. Fire insurance premium income also declined by 5.3% to rupees 24,286 crore. So this data is not very encouraging. This data is not very encouraging because these companies which are doing the general insurance business are not very profitable unless the volume of premium is increasing. Because in 24-25, the Indian insurance sector is projected to continue its growth trajectory, with the Indian market poised to become the fastest growing among G20 nations. So the total insurance premiums are expected to grow by 7.7% to 11.2% lakh crore, driven by factors like economic expansion and increasing demand for health insurance. The public sector general insurance companies, which were historically unprofitable, are seeing a turnout, with all companies now profitable. However, the overall insurance penetration rate remains relatively low at 3.7%, below the global average of 7%. Below the global average of 7%. So, the insurance industry in India has witnessed an impressive growth rate over the last 2 decades, driven by the greater private sector participation and an improvement in distribution capabilities, along with the substantial government operational efficiencies. But why this is not a good sign, not giving the good growth under the health segment? That is the reason. Because the performance of the business is still not very impressive. 3.07 lakh crore is good growth, no doubt. But the rate of the percentage of growth has declined. That is questionable. Health segment is, of course, has not performed as it was expected. So the performance of insurance companies in financial year 24-25 is not that remarkable. The results published by General Insurance Council are interesting. In the fiscal year 24-25, India's non-life insurance industry witnessed a significant increase in gross direct premium, underwritten with a notable contribution from standalone health insurers and specialized PSU insurers. While motor and health insurance segments have driven growth, it indicates that the non-life sector experienced a 9.28% year-on-year increase in July 2024. Additionally, public sector general insurance companies have shown a turnaround, with most becoming profitable. So Q4 results are important from that point of view. Because Q4 results are highlighting the fact that which portfolio has performed well. This business, which was expected to grow in double digits, is that the scenario now? That is the question. Because the performance has to be seen in that reference only. General insurance business, in fact, always had the growing tendency. And the segment-wise report says there is a decline in fire insurance, the figures are declining. Reason being, the fire insurance says it has not reached to the level which is performed last year. So it needs to be analyzed why it is so. Thank you very much.